Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're looking at the latest research note from Morgan Stanley on Tesla, who have a $900 price on Tesla stock over the next 12 months, suggesting about 45% upside, about $300 from where we are today. So let's get into the video. And by the way, since I know there's a lot of crypto lovers watching and people who like free stuff, it's your lucky day. For a limited time, you can get up to $250 in free crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. It also helps out the channel. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it. Here we are looking at the latest research note from Morgan Stanley. I quote, 5 thoughts on the path forward for Tesla. The stock rating overweight, industry view inline, price target $900. Let's begin with a healthy dose of intellectual honesty on the starting point for the stock. In our opinion, even bulls should admit that the rise in the stock price during the second half of 2020, while perhaps deserved in principle, just jumping in here, after doing literally nothing for 5 years while Tesla continued to execute, grow revenues, grow production, blah, blah, blah. Yeah, this was kind of inevitable. It did need to happen, so it wasn't surprising. Exactly when it was going to happen could have been anyone's guess, but this wasn't exactly like, oh my god, why is Tesla stock suddenly going up all of a sudden? It was more a case of, well, fucking finally. Anyway, let's continue. While perhaps deserved in principle, was packed into a highly concentrated time frame. This is absolutely true. Combine that with the institutional inertial forces accompanying the S&P 500 inclusion, and the recipe was, in hindsight, a classic blow-off top. The stock had the better part of 5 years worth of performance packed into about 5 months, nearly halfway through the year, and the shares have significantly underperformed the broader market as well as the broader technology and automotive peers. Generally speaking, I think these were all reasonable points. I'm not super surprised to see Tesla stock coming back from the recent highs, given all the forced institutional buying around the S&P 500, etc. Not surprising. The key is, where to from here? Over the past couple of months, incoming client interest on Tesla is focused mostly on Chinese sales, production data, and Elon Musk's tweets regarding Bitcoin. Might Tesla Bitcoin fever may be telling us something about the lull in Tesla sentiment? You just know it's a rather dry spell for Tesla when Bitcoin is the dominant news story and the dominant driver of investor discussion day in, day out. In our opinion, what's considerably more interesting than decoding the Tesla-Bitcoin relationship is the fact that there is a virtual vacuum of developments and news related to other areas of technological and commercial progress that the company is involved with on renewable energy, storage networking, and transportation. Yes, the Model Plaid S unveil was fun, but where's the next big development to move the company forward? A few thoughts about what we believe can compete for investor attention on the Tesla story from here through year end, most of which are non-China developments. 1. Capacity expansion, primarily outside of China. We think the opening of Berlin and Austin gives Tesla an opportunity to introduce unit economics that should be significantly superior to that of Fremont. We don't believe investors appreciate how difficult it is for an auto company to produce a positive operating profit with California-based production and associated input costs and other unique inefficiencies of the Fremont factory. And just chiming in here, this is a very valid point. For those of you that don't know, Tesla basically bought the Fremont factory for pennies on the dollar in the midst of the global financial crisis. They didn't build this place from the ground up. They took it over. The layout is a bit of a clusterfuck. It's quite inefficient. They don't have the latest technology. This is Tesla's very first factory, and it wasn't even something they designed from scratch, making the best of what they can. And of course, the high costs in California are extremely on point as well. High wages and all sorts of other high costs there as well. So this is a really important point. Apart from the fact that California is currently going to hell, shout out to Gavin Newsom. Round of applause for this incompetent governor. Won't go there. California is one of the worst places on earth to be manufacturing vehicles, yet Tesla is still doing so highly profitably. And each new factory that Tesla develops is a new iteration, putting all of their learnings from their previous factories, their previous production lines into play, new technologies, new production techniques, etc. We're going to see, as Morgan Stanley point out there, each new Tesla factory enormously more capital efficient over time. A lot of investors, as Morgan Stanley point out, aren't appreciating this fact. There's going to be a lag effect. It's going to take time until the factories have really ramped up, but then we start to see that capital efficiency really come into play. We remind investors that auto OEMs were reducing their California footprints over 5 decades ago. Beyond Texas and Deutschland, we forecast at least 5 additional auto plants by mid-latter decade, including markets such as India, Northern Central Europe, further US expansion, etc. And I think they're on point here. My best guess is Tesla's going to probably add an additional 5 to 8 factories from the ones that we already know about today over the next decade. Number 2, new model expansion beyond SX3Y. Come on, guys. Can you please just use the joke here, Morgan Stanley? Where's your fucking sense of humor, guys? Come on, look at this. S3X. Come on, guys. Really, please. Just the joke's there for a reason. Use it. Come on. No sense of humor. Tesla achieves most of its nearly 1 million unit run rate with essentially 2 models, the 3 and the Y. We estimate that Tesla's 4 models address substantially less than 15% of the total US light vehicle market by segment. With our assumptions of an expansion to Cybertruck, as in pickup truck, which is a huge market in the United States, for those that don't know, the 3 top-selling pickup trucks alone do almost 1 million units each per year. The compact car, which most of us are referring to as the Model 2, the $25,000 Tesla, my suspicion is that we're going to see localized designs of this, a Chinese variant, a European design variant as well, but that platform is likely going to be a monstrously big seller. I'm talking 5, 7, 8+ million units per year alone. Huge market. And a multi-purpose /MPV, multi-purpose van. And by the way, this is absolutely right. Morgan Stanley completely on the same page on this one. I've been talking about this for over a year on the channel. Tesla's roadmap from here, get the Cybertruck out, then the Model 2, then a van, then you're pretty much done. You've covered all the major modes of terrestrial transport as per Tesla's secret master plan, part 2. We expect to see Tesla address all new customer segments such as commercial, rideshare, affordable, very affordable, megacity, and other segments. Our discussions with investors reveal a bit of a blind spot on the potential segment expansion. You know what's really funny? I mean, I don't want to be too insulting to the investor clients that are working with Morgan Stanley here, but this shit is in Tesla's secret master plan. It's been on their website for like half a decade now. Let's bring it up. So here we are on the Tesla website. Imagine that. On the Tesla website, looking at some information that laid out this exact plan. When was it? Oh, that's right. Half a decade ago from Elon Musk. I'm just going to skip to the point here. Tesla stating their goals here, the 4 key points of their secret master plan. Expand to cover the major forms of terrestrial transport. Today, Tesla addresses 2 relatively small segments of premium sedans and SUVs. That was the S and the X. With the Model 3, a future compact SUV, that turned out to be the Model Y, and a new kind of pickup truck, the Cybertruck, we plan to address most, keyword there, most of the consumer market. That's different to cover the major forms of terrestrial transport. The major forms as in all of the major forms. Now, I don't want to be a douche lord here, but I mean, I don't know how else to say this. This is literally on Tesla's website. It literally says, in their publicly posted secret master plan, which is obviously tongue-in-cheek, in just 9 words, expand to cover the major forms of terrestrial transport. So, yeah, if there's no compact car announced now, it will be. If there's no van announced now, it will be. Cover the major forms of terrestrial transport. Oh, duh. This shouldn't surprise anyone. This shouldn't be a blind spot. It's been on their website for half a decade. I mean, dude, oh my God. Like, who are these investors? Obviously, most of Morgan Stanley's investor clients have never heard of YouTube. Some dickhead called Solving the Money Problem, December 12, 2009. Over 300,000 people saw this video detailing every aspect of Tesla's secret plan. Maybe they missed that video. Same dickhead, different video, January 19th, 2020. Over 100,000 people watched the video laying out the fact that it was obvious that Tesla would be making a compact car. And what do you know? Would you believe it? The same dickhead, June 4th, 2020. Over 400,000 people see a video talking about Tesla's van. I mean, yeah, Morgan Stanley, I don't know what world your investor clients live in, but I guess that's why they're paying you for these insights. Now, I'm really not trying to be a douche for its own sake, but I mean, this is in Morgan Stanley's own research note. Our discussions with investors reveal a bit of a blind spot on the potential segment expansion. That is more than a bit of a blind spot. That is a gaping void. Anyway, let's move on. 3. Battery manufacturing expansion / including third-party supply to other OEMs. Based on our analysis of and discussions with a variety of global OEMs, both legacy and startup, we see scope for Tesla to act as a tier 1 supplier of its technology to rival OEMs who determine it is more financially viable to leverage Tesla's scale and technology rather than to reinvent the battery. Now, taking a pause here, I actually agree. However, big caveat here, Tesla will not supply batteries to other automakers or any other companies until they're able to produce battery cells in excess of their own needs. Now, I don't know when this will happen. There will be a day when this time comes. I think it's going to be at least a few years, maybe 5+ years. But Inevitably, I think this is likely to happen in the long run. Why? Pretty simple. Tesla has the best engineers. They have the biggest brains. They have the best technology. They're so far ahead of everyone else in the industry. A great example of this, the 4680 cell that Tesla invented, yet the car company, they're just a car company, Tesla, invented and unveiled at Battery Invest today, is now being mimicked by other companies whose primary business is battery production. Think about this. Why is it that Panasonic, LG Chem, CATL didn't themselves re-engineer, reinvent the battery cell? It took Tesla coming along and going, hey dickheads, even though we primarily make cars and software, we're going to make better batteries than you, and then you guys are just going to have to copy us because you haven't been doing enough innovation and we can't wait around for you to figure out how to make better battery cells, so we just got to do it ourselves. This is a really important point. Tesla has a huge technological lead, including in battery cells, and I don't see this going away. They've got the biggest brain engineers, they've got the best leadership, and they've got the reason to actually scale up their battery production. So, second half of this decade, Tesla is very, very likely to be supplying battery cells to other automakers and other companies for all sorts of other applications as well. Why? Because not only will they have scaled up their production and be producing more battery cells than anyone else on planet Earth, but the battery cells they're producing are going to be far better than anything else available. Bit of a no-brainer, but I want to be really clear, I don't see this happening anytime soon, and the constraint is Tesla will not do this until they can produce far more cells than they personally need for their own use in their own products, including vehicles and home storage. Number 4. Expansion of service offerings to a broader range of its vehicles, including via subscription. Admittedly, we anticipated significantly greater levels of development and announcement around Tesla's software as a service type commercial offering than we have seen year to date. Our views of Tesla's software as a service potential is consistent with our views of the broader auto industry as an Internet of Cars ecosystem. The value of data derived from connected cars and the recurring revenues derived from the cars as rent-gathering mobile real estate can significantly exceed the net present value of cash flows generated from selling the vehicles themselves. And absolutely agree here. It's not just the full self-driving package, which currently is a $10,000 upgrade, almost pure profit for Tesla, soon to be a subscription available as well, but it's also things like infotainment, productivity, gaming, etc. Now we're seeing the early stages of this. We've recently seen the Model S Plaid, people actually playing Cyberpunk inside the vehicle, PS5 quality gaming inside a Tesla vehicle today. Just cast your mind forward a few years when Tesla's got 5-10 million vehicles on roads, 10 million users out there who can download content, subscribe to applications, and not just Tesla applications. Much like the iTunes Store, the App Store, where Apple takes a ludicrous cut of all of their revenues, the same thing can be happening through a Tesla App Store in the future. It's not just Tesla developed and designed software that people can be buying that'll make Tesla money. If somebody, say, decides to subscribe to YouTube Premium through the Tesla App Store, Tesla can take a slice of that as well. Number 5, insurance. While the value of Tesla's insurance is less than 4% of our $900 price target, we believe Tesla's entrance into the P&C insurance market will serve as an important signal to investors as the potential for auto companies to monetize its connected car real estate. The vigorous nature of investor pushback on Tesla insurance is intriguing to us. Who are these Muppets pushing back against Tesla insurance? I don't get it. I mean, let's just take a quick break here. For those of you who haven't already heard my spiel, I've covered Tesla insurance in a couple of videos. I think between them, they've done over 500,000 views, so a lot of people have heard this spiel already. But the point is, cast your mind forward a little bit. Tesla has better telemetry on their own drivers than anyone else can or ever will have. Therefore, we can make the logical inference that at some point in the future, Tesla will be able to better price their insurance products than anyone else in the marketplace. Therefore, you'd have to be kind of a moron not to opt for Tesla insurance as a customer who also owns a Tesla in the future, because Tesla's going to be able to price their insurance product better than anyone else can. This is an inarguable point. Tesla will have the better telemetry, right? They've got all the data, and data is how insurance is priced. There's people, actuaries, whose full-time job is to price these kind of products based on the analysis of the available data. Better data equals better pricing. Duh. We continue to believe that Tesla's commercialization of fully autonomous products and services is likely materialized well beyond the 2030 horizon, and do not give the company any specific material value for its autonomous vehicle technology at this time. Yeah, so just for the record, this Tesla price target, $900 per share, does not include autonomy. And also, just for the record, Morgan Stanley are going to look like absolute clowns when Tesla has autonomous vehicles on the roads much sooner than expected. They're not expecting autonomous robotaxis from Tesla anytime this decade. They really need somebody that understands artificial intelligence, neural networks, deep learning, and the importance of data at Morgan Stanley. Adam Jonas, if one of you or your mob are watching, please hire somebody. Copy what ARK Invest are doing. A final note on Tesla in China. We continue to urge caution to investors on the Tesla China situation. Specifically, we struggle to see foreign players remaining in control of utility-like transport companies that offer mission-critical, GDP-dependent services to the citizens of China, or potentially other important economic rivals. This comment reflects our team's view on the broader industry, not just Tesla. That said, there may be a number of circumstances through which Tesla shareholders can retain a financial umbilicus. I've never seen the word umbilicus written before. I'm assuming that's like an umbilical cord, the same kind of a concept, to a separate Tesla China entity while remaining strategically and operationally separate in every other way. The near-term situation remains fluid and we are keeping an open mind, but we will continue to look for the ex-China narratives as critical to reviving the stock from here. This is interesting from Morgan Stanley. I think there may be a grain of truth here. I think China really does want its local players to win here, but I think that Tesla's technological superiority here is going to give them a huge leg up anyway. And I think in the worst case scenario, maybe Tesla's software, Tesla's full self-driving software, ends up running a lot of the autonomous vehicles produced by other automakers in China, like much of the rest of the world. Anyway, this is something that I've speculated a lot about in the past, and my reasoning is quite simple. Tesla has won the race to solve autonomy, and Tesla's data lead is unassailable. The point is, Tesla's going to have the best, not just a little bit, but the best autonomous software by miles. I get it, miles. That was bad. But literally, they're going to have the best autonomous software by miles of any company on earth. And here's the decision you have to make as an automaker. Do you try to develop your own software and go through the arduous process, the tens of billions of dollars all the time, blah, 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 and kill lots of people in the meantime? Or do you decide to license the software from somebody else? And if so, which software are you likely to license? If you can statistically see that, say, Tesla software is 5 times less likely to be involved in a fatal collision, do you really want to have blood on your hands by picking the second best autonomous software, knowing, having the data to show that more people end up dead as a result of your decision? I don't think so. So I hope you guys have enjoyed this video. I think overall, Morgan Stanley are starting slowly to really come around to what Tesla is and their future potential. That being said, I still think overall they're way too bearish on the company. The fact that they don't believe Tesla will have solved autonomy anytime this decade is going to be laughable. In fact, let me know in the comments below. What year do you think Tesla will deploy their very first robotaxi? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like up to $250 in free crypto bonuses with BlockFi, use the link in the description. You can also get 2 free stocks with WeBull and a free stock with Stake, also linked in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.